Yes, we are live. So, hello everyone, and welcome, and thank you all for joining. So, we are ready to start. My name is Elena Grinyuk, and I'm regional manager for the Central Eastern Europe at the SME Banking Club, and I will be your host today. And the topic of today's webinar is the overview of the factoring market in the Central and Southern Eastern Europe regions. And I'm glad to be joined by Betul Kurtulus, Regional Director for the Central and Southern Eastern Europe and Middle East at FCI. Hello, Betul, and thank you for joining.
Hello, Lana. Thank you for inviting FCI and myself for your webinar. I hope
Yes,
everything is fine in Poland.
yes. Okay, so before we start, let me quickly mention some organizational moments. So our webinar is scheduled for 40 minutes and we are recording this webinar. So right after we finish, you will receive the link to the video and the presentations. And in the end of the webinar, we're gonna have time for the questions. So please type your questions even now into the chat and we will be ready to answer them in the end. So let's go to the topic. So here actually we are ready both from the side of FCI and us at SME Banking Club. So we wanted to share and discuss with you some of the updates on the market. So last week FCI published their annual review and Betul will share in a minute its main outcomes. And we at SME Banking Club at the very moment producing several studies, including the one of the digital factoring solutions for SMEs in the region. And I would like to share with you some updates on that and invite you to participate in it actually and be nominated for the awards on the best factoring solution in the CEE region. But about this a bit later. So first of all, I'm passing the words to you, Betul, to share the overview of the market, of the factoring market in the region, and you're welcome.
Okay.
Yes.
Thank you, Olena, for organizing this webinar and for inviting FCI and myself. I want to introduce myself once more. My name is Betül Kurtuluş. I am the regional director of FCI, responsible for Central Eastern Europe, Southeastern Europe, and the Middle East. As you already mentioned, FCI announced the latest world factoring statistics. So I would like to share some slides about our statistics and the effects of the coronavirus pandemic in our industry. So I would like to start with the global factoring volume. This slide shows the volume from 1999 to 2019 for the last year. It shows, I think it's better. It shows for the last 20 years. You see here the distribution of the turnover with international and domestic. Roughly saying, the domestic market share usually in almost all countries is 20%, and the international share is domestic share is 80%, and the international share is 20%. And for the last 20 years, compound annual growth rate is 9%. It is very promising and very good number. It is because when you compare this growth rate with the development countries' growth rate, which is over maximum on the 2%, and even it is more than the emerging markets growth rate, which is maximum 68%. So it is we find it very promissory for the future. Of course, I'm talking except the effect of the coronavirus. And this is the global statistics and the market share by the region. You will see, or the biggest market is Europe. Europe is biggest and the oldest market, and the growth rate is 8.5%, which is very good. It was almost the same with the previous years. And Asia, you see 2%, almost 2% drop for the last year. This is because of I'm sorry. This is because of the trade war between Asia and the US. So we will see the effect, and we will see the effect of the coronavirus in the Greater Asia, most probably almost this year. But the effect coming from the China and the Hong Kong. There are also some positive countries in the Asia market, like Taiwan. We will see on the further slides, but Asia, of course, experiencing a slowdown on the factoring volume. And here is the America. It is slowly improving in the America market. And right after here, very promising market, Africa is a 10% increase we see in the African market. And from the pandemic point of view, we are expecting a very high increase in the African factoring market. This is the feature of the product for us because of the changing supply chain preferences. We think that Africa will take a very big share from this change. And the Middle East, you see here the amounts quite small, but the increase, it was 8% from the previous year and 10% this year. This is also very promising. We have very strong members in the Middle East, but because of the not only for the coronavirus, also from the oil prices, I think we will see a sharp decline in the turnover in 2020. But in total, it is promising, still 5.6% increase in the global market. So it is the factoring in the world in 2019. You see here Europe is the largest contributor, representing 68% of the total. Very old market, and all products are in the market. And you see here the Asia Pacific region representing 23% of the global volume. And when you go to US, there is a steadily growth in the US market, and takes the 7%, 5 and 7% of the market share. Here is the Africa and the Middle East. You see both markets are lower than the 1%, very small, but promising markets. In total, you see the world factoring volume is 2.9 trillion euro. Here is the Europe statistic. When we come into the Europe market for the last year, the statistics are still very promising. I think this is the last year that we will see this increase on that upwards slides, because this year, of course, we will see some slowdown in the European market. But until 2019, we see only in the UK market it is 3%. This is the effect of course, the Brexit. But the other continental economies, we see here France and Germany is 9%, Germany 13%, Italy 6%, and Spain 12%. In other also European countries, they are all the increase in the 10% because of the effect of the UK. You see in total Europe is 10% increase. It is very promising. And when we come to the Central Eastern Europe, Southeastern Europe market, here you see the Poland, very remarkable performance with the 17% increase during the 2019, and also the performance for the last couple of years is very good. There is also one very good performance in Hungarian market. It is 23% increase. It is also very good, even the amount is quite small. We see Russia here, second biggest market. The increase is very small, it's 2% in Russia, but still the market is very big, especially in the domestic market. You see here Turkey after 2016 till last year. Also, of course, the expectation for this year also, the market is shrinking. For the last couple of years, the market is losing its momentum, unfortunately, because of the economic crisis in the country, and also we are still suffering the high volatility in the currency and the Turkish lira drop. So it is the effect, we see effect here in Turkey. Turkey used to be the biggest market for the last couple of years, but last 3 years the shape of the CE and SE market changed. Coming into the first COVID effects on the region, you see here is the data is from Edifactoring by the end of the first half of this year. It is the decrease is everywhere. It is almost 42% decrease in all markets. You see Turkey, but it is the biggest market, but it is the similarity of the decrease is everywhere. It's almost 42%. When we come into the variation of the export and the import, by the end of June, the decline is 42% in all markets. Here you can see the effect in all markets. The decline is, it seems from the manufacturing volume, it seems the decline is decreasing. We had 48% decline until the end of May, and end of June the decline is 42%. But my personal expectation is this: we will see the highest decline by the end of third quarter, and for my personal expectation, the recovery will come hopefully in the end of the last quarter. The slowdown in activity of March and April and May is a sufficiency for all markets. But my expectation and all the economists' expectation from different banks, the shock, the narrowing in the economies, the shock we will see in the third quarter in the all emerging markets and the developed markets, and also in the US. Of course, the US market will affect all countries. At the end of the fourth quarter, the expectation is recovery in all markets, but annual growth rate for all banks' expectation will be below minus as a whole in all markets. And despite the volatility, the constantly changing situation in all countries, this changing situation surrounding the coronavirus leaves no doubt for its massive impact for all countries. It is, you can see this all the effects, but of course some white lights here. Some of the countries, they have a very good performance for some months. It is June. But generally speaking, the expectation is not that positive for the economies. I think the day before, European Commission released their economic forecast according to their summer economic forecast, because before they announced their spring forecast, which was more positive than the last one. The last one is the summer forecast, and they are expecting even deeper recession with the wider divergences in this year, despite the fast and comprehensive policy response in both Eurozone economies and also on the national levels. But still, their expectation is much more worse than the previous one. And coming back to the 2019 results, the share of the, you see here, the share of the two-factor exports. Taiwan is in the first rank. Turkey used to be in the first rank for the last couple of years, but from the last year, Taiwan is in the first rank. Turkey is in the second one, and Italy is in the third one. And here is the two-factor import volumes. You see Taiwan and Singapore, they are sharing in the first rank, and Germany in the second, US in the third place, and the rest of the countries you will see here. And when I come to the market structure, it is usually almost in all countries, the market is combined, it's very oligopolistic, and it is very concentrated market. Combined market share of 5 biggest factoring companies in each country, on the average, is more than 80%. And it is very bank-dominated business, I must say. Only 7% of the market coming from the non-bank financial institutions. The rest already dominated by banks itself, and also with their subsidiaries. And the key figures, I think Olena will send all the presentations to the participants. So I already mentioned those figures, but I only want to mention here the important one. The average penetration of the world GDP, it is 4%. It is almost close to the insurance companies' market share. It's very, very important percentage. And here is the product distribution. From country to country, of course, the products are differs. In some countries, we are seeing the invoice discounting. In some countries, we see non-recourse. But in general, 42% we see the biggest share is non-recourse factoring with the credit protection. And for the 23%, we see invoice discounting and recourse factoring right after that one. And as I mentioned, it is generally the distribution between the domestic and international share in all countries is 20% to 80%. 80% is the domestic market. So domestic market support is very high on the global factoring turnover. But last year it is a bit more than the 80%. It was 81%. And here is our membership distribution. You see here we have 400 members in today 92 countries we are representing. Here you see the blue dots, the FCI members active in two-factor business. And sorry, and the purple dots, so you see FCI members presenting but not active in two-factor business. And here is the membership distribution. You see here is the increase. And the interesting thing is the increase for the last couple of years here from the 2009 to 2019 is the new members usually coming from the emerging market, which is we find ourselves very successful in this one. It is very, very good for us from the to having a new member from the emerging markets. And we have 6 regional chapters. So we are trying to represent all of our members and solving the problems. I think FCI act very, very strongly during this coronavirus pandemic. We announced 6 circulars during the Corona days to supporting our members, and also we organize many webinars for our members to support their problems and to show the way how we can handle these problems. So we have one chapter director in Americas and in Western Europe, myself in Central Eastern Europe, Southeastern Europe, and we have one in Africa and 2 in the Asia. Here are some statistics from the market. Of course, these statistics will change. I think very, how can I say, it will change because of the coronavirus effect. But until now, we don't see so much difference in the statistic. These statistics are coming from the end year. This is the late payments by importers. So there is a sharp decrease here, you see. But it is interestingly, by the end of the July, the late payments is not increased in the market. This is something I want to comment on this on the positive side, but we cannot see from the statistics. Maybe some of the importers do not pay at all, because if they are going to pay their invoices, they are paying on time. This is what we see from the statistics. And here is the credit approval rate. Top FCI import countries by end of the last year. Here is, you see, it is almost more than 40%. I think it is very positive because on the insurance side, we see it is like 25%. So I see that it is quite positive rates here. And here is the disputes as a total number of invoices. This is very interesting slide, because when you see here from 2009 to 2019, here is the percentage of the disputes. What I can see here, I can say the disputes are decreasing. This shows me that the two-factor system and also the direct factoring works quite well because the system itself solving this kind of problems. So it is the payment under approvals. This slide is especially important for us as we are in the very difficult days with the effect of the pandemic. Here is you see the payment under approval for the 2008-2009 crisis. You see, I think the system approves themselves that they paid on time for the payment under approval. And also right after the 2008-2009 financial crisis, we see until the 2013, we see in 2 years' time, FCI total turnover doubled in two years' time and tripled in 3 years' time. So there is an increase here and the payment under approval because this comes from the increase of the turnover. But it is for the performance of our members. You can see here from the crisis time. Of course, we will see this statistic very important after the effect of the coronavirus. So here is the opportunities and challenges in the system. Many of our participants are coming from the factoring companies. For me, factoring is the most easy and valuable solution for even for the big corporates, for SMEs, MSMEs, for all market players. We have some challenges, of course, on the regulatory side, especially in these digitalization days. It is very important. We are going online for everything. It changes all our life. So it is our social life, everything. So digitalization is very important. The opportunity is here, but the challenges, the most important challenge, I think, the fintechs. Of course, we are working together hand in hand, but we are also competitors with the fintech companies. So I would like to give the words to Olena for this one, to explaining how fintechs affects our market.
Yes, thank you, Bitul, for your presentation. We will get back actually with the questions like in let's say 10 minutes, answering your questions, because we start receiving first, and I encourage you to ask your questions while I will be presenting. So yes, if we talk about challenges, things are dual mainly. So maybe somebody here in terms of fintech see challenges, but actually we have examples that this could be seen as opportunities for the factoring market. I will show you here. So what are the challenges? Yes, as you mentioned, actually, that the number of the volumes of the trade is decreasing, and this is obvious. And also the main markets for the SMEs here in European Union also are decreasing, and SME probably need to diversify their markets, which also need some effort. They don't have some experience in new markets, so and probably they will need some support, and they will expect from the banks or financial organizations some support in this. But also there are opportunities actually, and in the area of fintech, so there are several trends maybe. So the first one, of course, that actually for factoring industry, the times should be not so bad maybe as for other financial sectors or products, let's say, because when in times of crisis and in times of some restriction of the credit policies, so the banks and other financial organizations are usually tend to finance companies for the asset-based lending, which is, for example, factoring and leasing as well, because this is less risky for the financial organization. So here, actually, factoring can gain some new volumes even due to that. Then we see the trend of the digitalization because of the limitation, yes, of the opportunities for the physical contacts with the branches or relationship managers. So the financial factoring companies should have to become online, to continue the business, let's say, and continue the relationship with their customers and acquire new, of course. And also there is so we see also new examples which I show you a bit in a minute actually, that actually there is a possibility, and this is a very fast way to implement digital solutions, is actually to cooperate with fintechs, because fintechs have the, let's say, the solution, the digital solution for the market, and banks have customers. And this is the fastest way actually to cooperate, is actually to launch either co-branded or white label solution together, and this will be a win-win situation actually for both parties. Here, I would like to show you some slides. We were discussing this actually in April. We did a joint webinar with a fintech factoring company called Smeo in Poland, and actually they presented this slide, and I wanted actually to show it once again. This is a snapshot of Polish market, but it can be translated actually for the whole region, so that the traditional factoring companies covered mainly corporate customers or bigger SME customers, and these micro customers and small customers, which are actually here on the bottom of this pyramid, they are still not covered by the banks and traditional factoring companies, just because of the maybe not digitalized processes, and of course this is not paid off for the micros with the small tickets. And that's why actually this also can be an opportunity for the factoring companies and banks, that to cover also these micro companies which are not covered by the banks, which are probably will be now restricted to the access a bit to the lending as well. And this is actually the opportunity to increase some volumes here, because the factoring, so this will be a new customers to factoring at all, because they usually they haven't used it before. In Polish market there was a questionnaire, so like about 4% of SME customers knew what a factoring is as a product. But actually now we have seen from the general in all the markets that from March, the words connected with the factoring, the search, so the number of searches increased in 40% starting from March for the words connected with factoring and factoring finance. So here I think we can gain some new customers due to the situation that we have. So as I announced, right now we are producing 6 studies, and actually one of the first will be the digital factoring for SMEs, which we plan to finish till the end of this month. Now actually we are exactly in the process. So the idea and the purpose of this study is to show and to do an overview of the market. So which solutions are available for small business customers in the Central Eastern Europe in online, so in a digital way. So we analyze main countries here and main financial organizations and banks, and fintechs also included in this review. And so this will be so the study will be connected with one Excel table showing the functionality list and what is available for SMEs, and one full report with the detail print screens and the processes descriptions, how these processes of customer onboarding and financing look like. And in autumn, we will have SME banking awards, and digital factoring will be one of the categories. And based on this study, we will do a ranking of the best solution, and the best solution actually will be will receive a prize. So I actually invite you to apply and take part in this study. So if you have a digital solution for SMEs in the factoring area, so please contact me to include you here and nominate. So if to go to some details, so what we see exactly now in the market is that, so actually here we see 2 main leaders, Poland and Romania. Poland has 3 banks here, which are ING Bank, mBank, and Santander, that offers their SME customers completely online processes for domestic factoring, which is, as you said, that this is the main product, and for SMEs this is definitely the main product. So everything from starting from application, decision making, and disbursement, meaning the setting of the factoring limit, and then the invoice uploading and receiving the finance, is happening purely online. And here also I would like to comment that actually the third bank, Santander, actually launched their solution with the cooperation with the fintech actually last week, and this is a good actual example of how banks can really fastly implement and market a new product for SME customers. And here also in Polish market, we have fintechs that offering factoring products for SMEs. Exactly, they're targeting micros and SMEs. And we have 4 factoring companies offering online application, and 3 of them offering full online processes for the decision making and setting the limit and disbursement financing of the invoice. In Romania, we have an interesting case with a B2B marketplace for invoice finance, which is called iFactor. And actually, Banca Transilvania also has an online application for the factoring product. They implemented it in their online banking solution, so meaning that this is for the existing customers. And maybe to show very shortly how does it look like. For example, if you look at the example of the ING Bank, what is the process of customer onboarding? So the customer registering in the website, in the system, so confirm their personal details, meaning the text number, email, and phone. Then activate the account, which is a 1 second action, and then to do the KYC processes, meaning that the customer transfers 1 zloty from existing bank's account, and this is enough to prove that customer is existing and active one. And then when the account is activated, then the customer already can upload invoices by making a photo or attaching the scans. And then the data is automatically analyzed, and then also there is a check with the buyer. So the buyers also receive the request that the customer wants to finance the invoice. And then, so as fast as the bank receives the answer from the buyer, then the invoice is financed immediately. And so the maximum time to cash, let's say, to finance the invoice here is 1 working day. And to show also one example for the fintech, so this is a fintech called Smeo, also in Poland. So the process of online onboarding is actually looks the same. So the customer creates an account on the website of this company. So so it is needed to input the text number, and then the company details are fulfilled automatically. And then also confirming email and phone number, and then a customer should give a consent for this fintech to download the bank account statements automatically, so using this PSD2 regulations. And actually then fulfilling a form, I think that it takes, I don't know, up to 5 minutes probably from the customer to fulfill this application form online. And then sending the application form, and the decision is made really in seconds, because this is an automatical decision. And then the factoring limit is open for the customer, and then the next step actually is to upload the invoices. This is maybe also a bit the same process of the customer onboarding and setting the limit, but in a bit like wider way. So when a customer applies, it goes with the automatic checks with all the registers, with receiving the data from the bank account. So the customer is not required, to upload any bank statements here. And then the scoring is also made automatically here. And then the customer, receives the login and the access to the factoring system platform, and actually uploads the invoice and also receives the financing here. And this is for the product of domestic factoring here in Poland. So actually, these are the main cases that I actually wanted to show you. Maybe I will say on this on this slide. And this actually the opportunities that we see here on the market, that such a factoring automation makes it easier, and less time consuming for all the parties here, and especially in these segments of micro and small companies, and can increase the volumes of factoring. Especially this time. So this is actually what I wanted to share with you. I see we have some questions here, but if I may, I would like to ask you firstly on your part, on your presentation, actually on your feelings and your personal understanding of the market in the region. What is your feeling or your forecast? Maybe you have some insights from the markets, from your members. What will be the result of this year? Because yes, we actually discussed also during our last factoring webinars that the first quarter of this year was like very good, so it was not still affected by the corona crisis. And here, for example, in Poland, there was probably one of the biggest increases in the first quarter, which was 13% compared to the same period last year. For the second quarter, it shows already a negative dynamic, but if we count and due to the positive result of the first quarter, still the results for the first half of the year is positive. It's like 2-3%. But of course, so what is your prediction? What is your feeling? How this year will look like? Do you have some insights?
Yeah, Olena, of course it is very difficult because the effect of the coronavirus we cannot predict country to country, because the evaluation of the virus and the health system, everything will affect our both social life, our business, everything. So it is very difficult to predict the year end. But of course, the first quarter we will not see any effect of the virus. In between the second quarter and the second quarter, I think this will be the worst one because of the lockdowns. All the developed countries, they all close their production areas. Of course, this will affect the emerging and developing countries, because they are totally depending the demand from the developed markets. So it is. We will see the effects of these lockdowns in our economy. It's technically not possible to do any business. So it is in the second quarter, even we, as I see from the market, the effect is not that huge. From different markets, I am taking the feedbacks. The shrinkage in the total asset side of the balance sheet is between 5 to 9% until 10%. So it is 10%. Even is not that high. As I just asking many of our members on the asset side, they are not shrinking that much. So the expected shrinkage is not faced with the factoring companies, as I can see from the market. But it is very difficult, of course, to see the effect of the second quarter, the third quarter. At the end of the year, my expectation is not that big shrinkage in the market. It is more or less, it is 15 to 20%. I am not expecting more than a 20% decrease in the market. But yeah, right after of course, 2020, because we all see in this is same effect in the factoring industry. Right after the crisis, the demand and also the from the small business market and the big corporates, the demand is high right after the crisis. So it is most probably we are going to face with the 15 to 20% decrease. But 2021, 22, my expectation is we will recover this loss for the whole industry.
Yes, just because this is, as we discussed, less risky product, and hopefully, if you talk about SMEs, they will get faster access to this type of financing of the working capital. So hopefully, so it should. I mean, it works. I mean, it's usually.
Yeah, it is. It is. Yeah, it is. This is an SME crisis. We can say that this is the SME crisis. This is not a financial crisis. The banks are much more structured and powerful when they're entering this coronavirus crisis, but the SMEs will be the most affected part.
Yeah.
This is why factoring will do more business. We are very, as I see from our members, they are working very, very close to their SME clients, and they keep funding, keep their credit line as much as possible live on the SMEs. But of course, the SME part will affect it the highest during this crisis.
Okay, I propose to get to the questions. So the first one was when you were showing the slide of the number of disputes. Do we know the countries where are the biggest number of disputes?
Yes, sure, we know the countries, but it is we cannot give this information to even I don't know because it is a statistic. Of course, we have the statistics, but because of the competition law, we cannot disclose this even the amount and the country name. It is not possible. The possible because of the competition law, the possible all possible information we are publishing as an FCI. Please go to our website. We already published the statistics for as much as possible, as much as the competition law permits us. We have many statistics, but we don't have the country names as the biggest number of disputes. And I also want to mention that dispute is. It doesn't mean that a dispute is a bad debt. It is because normally many dispute cases being solved within the membership. Even they are not coming to the arbitration to the FCI. So it is dispute is some of course dispute happens, but usually it is being solved by time or maybe paid by the support of the import and the export factors. Because how can because the proof is like this. It is we have an arbitration solution within the FCI, and the 15 years history in FCI, we have I think 10 or 11 arbitration cases. It's very few. Which means that the disputes are not coming into the arbitration in FCI quite often.
Okay. Okay, next question. Is it possible to evaluate potential of a factoring market in a country by taking some average index, for example, factoring amount divided on GDP or similar? If so, what would be a good benchmark value? My first, if I can comment here first, my first idea here is actually I saw the statistics that around 50% or maybe even a bit more number of invoices are issued with a delayed payment date, meaning that the invoice is issued with the date, for example, 14 or 3 weeks or even months payment. So, and actually this is the potential, I would say, so this is the potential market for the factoring product. Because for example, I'm an SME customer, so I delivered the product or the service, I issue the invoice, and the term of payment in my invoice is in 2 weeks or 3 weeks, and this is actually the potential for the factoring. So I would like to finance such an invoice, using the factoring, and want to receive a cash right now. I mean, money to my bank account. So actually, we can collect these volumes. Okay, so the sales of the companies on the market, and maybe divided half, just as an approximate number to, and this will be the market for the for the factoring, probably here. Yes, but would you comment here? What do
Yeah,
you idea?
for the index, I really would like to comment on the GDP index because we are using GDP index very often in all our presentations. Not maybe this one, but usually we are presenting the GDP ratios as an index. And so for the developed markets, in the European developed markets, the GDP ratio is between 10 to 15%, which is quite good. But in the developing market, it is like in Turkey, it was 5%. Now it is last year it is 3.5%. So it is for me it is very good benchmark. And if you ask me what would be the benchmark value, it is maybe I think for me it's the 10% on the average.
Okay. Okay, the next question that we have here is how the factoring categorized in European Union countries as a pure credit instrument or not, and what are the approaches to risk evaluations and possible loss provisions? Um,
It is for the differentiation is like this. If all members, I mean, if a banks are doing factoring business, this is all same. But if you are doing factoring business as a bank subsidiary, it may differ from country to country. If you are doing factoring in a private non-bank financial institutions, in most of the countries, they do not have any risk evaluation or maybe reserve ratio. So somehow the most comfortable parts are the non-bank financial institutions, especially for the domestic markets. But in the banks, if you are doing factoring business, because the banks, most of the countries, the banks do have a factoring license within the banking license. It's not the same. It is the same thing. If you are a bank license, you can do factoring. But for the if you are doing factoring as a subsidiary, the requirements are less comparing with the banks. For non-banks,
mhm,
it is there are very few requirements. But we are really working hard on with the regulatory bodies to decrease some kind of reserve ratios for the factoring, because the factoring and MPS is very low. Not very low, but comparatively low with the banks when you compare.
mhm. Yeah, yeah, and it's true that actually this differs from country to country. This is.
It is, yeah, it is. But in some countries, even for non-bank financial institutions, they are doing factoring, but they are not counted as a financial institution. They're just doing factoring without some kind of a license of the financial institution. So country to country, it's very different.
Mhm. Okay, do we will we have some more questions here? So actually, we if we don't, then we will closing the webinar. So as I promised at the beginning, that we will send the materials and this video to you right after we finish. And Bitul, would you close the
Yeah,
this?
I want to say a few words about our education activities. If you
Yeah.
let me for the presentation, because from the pandemic point of view, I think education is key. It's really important because of the sales, because of the risk point of view. So we are recommending highly to our members, or not. I don't want to say the non-members, the people who wants to make their career in the receivable finance industry. We are recommending our education programs. But for our members, we have different programs. You can see here, uh, mainly online, so it is very important. And in these days, it is very easy to start because we are very used to online things. So we have online FCI career path. You see here the three steps. This is very good education program. If someone planning to career in the receivable finances, we highly recommend to finish all these three steps of the course. We have online certificate programs, especially for the banks if they are doing factoring, the sales and marketing, legal aspect for the legal people, and risk management for the risk people. It is very important to have the mindset of the factoring business from this education. So we highly recommend our education, and we have specialized online courses for all our staff. Seller selection, buyer risk, dispute handling. These are very important because in those education programs, we are not explaining the same routine education programs like in the banking industry, because these are totally different. Dispute handling, legal aspect, pre-sale, sailor onboarding, such different things. So it is you can go into our website to go for more details. But for the participant for today, I want to also explain or open courses to everyone, even for the students. They can take these courses. We have two levels. The level one is introduction for factoring and the receivable finance. It is very easy to have this. We are recommending for all the staff of our community, let's say, because everyone can take these courses. And the second one is the fundamentals on domestic and international factoring course. This is very important also, even when you are starting this business or you are continuing this within a bank or a private company. We are strongly recommending our education programs, but you can, if you can go to the website, you can find all the details. Or for further information, if you need, you can send an email to me, to FCI. We will happy to help. And Olena, thank you for this webinar. It's really good to be together with our community online. We are doing many webinars within the FCI. This is the first one with you. I would like to thank you in my name and also for the FCI.
Yes, and thank you also for contributing, Vitul, and I hope we will organize in the future this year another webinars. And thank you for your contribution. Thank you to all our attendees for staying till the very end, and see you next time online. Thank you and goodbye.
Thank you. Bye-bye.